Hey everybody, welcome back to Hoot Loot, a Hoot Entertainment production, a Markonomics 101 affiliate, and the place where you come to be informed, be amused, but never be misled at all. Today may be a little more amusing than normal because these are so ridiculous that they are amusing. And we're going to talk about, well, first of all, today is February 26th in the year 2022. And today's show is called The Bear Market Playbook, How to Beat the Bear. Well, I'll tell you what, it's also very apropos because we have the Russian bear exerting its influence on my fellow countrymen back here in Ukraine. Yes, I'm Ukrainian, but, I wish I could go off and fight those horrible commies, risk my life, but I just can't because of the obligations of the show. And after all, who would feed Ace? So can't really do it. But the next best thing is going to happen. I expect a call from President Biden at any minute. He's going to be awoken from his nap. And I have a perfect plan to make the Russians really pay for what they're doing. And we're going to talk about that in a minute. But, actually, you'll hear it when I tell President Biden. But in any event, the reason we want to talk about bear markets today is that it requires a change in your thinking and your sentiment and the way you understand things, okay? Bear market rallies are much different than the kind of rallies that occur in a bull market. For example, they're very sharp, they're very short, there are a lot of short covering, and they kind of look like, oh my God, the market's exploded, it's going up, let's get in, and they fade. And we're going to show you that too. And this is a very difficult market to trade. We're going to show you why. There were huge reversals last week and Thursday and Friday, and that made life difficult for a lot of people, I can tell you that. So in any event, if you would please like and subscribe, wherever the hell the like and subscribe button is, I'll point at something, it'll definitely be there. And I want to thank all the new subscribers that have been coming on in droves and droves and droves and droves. Well, maybe droves and droves. Well, maybe droves. Well, at least a couple of them. Well, okay. So none of them. All right, we'll be back with the charts in just a minute. All right, so we're going to go to our first chart of sentiment. Now, this is really important right now. And the reason we're starting with this is that you can cut the pessimism really with a knife. And what I mean by that is that people are leaning on the wrong side of the boat now. You're getting a lot of hedging, a lot of put buying, and a put option is a means of protecting downside. Now, there's a premium on the put option, and that premium expands when fear expands. So it's also a measure of fear. And we have a ton of it today. And I want to show you some of the investor polls that reveal it. The first one is the American Association of Individual Investors. These charts are going to be brought to you courtesy of Edward Yardini, who has a fantastic research piece, fantastic research. Can't give him enough compliments. But in any event, this one is the AAII sentiment. And what you can see here is that when the ratio is high, when it goes up on the graph or on the chart, that tends to be a lot of optimism, a lot more bulls than bears. So they're all bought in, they're all happy, and not too many people left to buy in. Okay, so when the people who bought in have finished buying in, there's no one left to buy. I mean, you do have to sell to a greater fool, and they're never around, unfortunately, unless you're a long-term holder. And people become long-term holders when they lose money. They were originally traders, then they're going to hold it for a year, but I was a long-term holder the whole time. Ask any Bitcoin investor, and they're long-term holders. Okay, guarantee it, even though they're trading it at the time. Okay, so in any event, that's AAII is a survey, and this is something you can actually look up on on Google. Yardeni Research. He has great stuff on there. Not as good as ours, of course, but pretty good. All right, this is a second investor poll called Investors Intelligence, okay? I know it's kind of an oxymoron, but Investors Intelligence is a different group of people. It's actually newsletter writers and pundits like me, for example, although no one asked me. what you see here is the same thing, is that the amount of pessimism is picking up quite a bit. So these guys tend to be a little slower than the individual investors that AAII surveys. But in AAII, it was a 40-year high or something of the number of bears. So we've got, the market's very due to rally and due to bounce, just because it's been pushed too far. I mean, it kind of, has to kind of spring back up a little bit, and we're going to show you that in a minute. All right. So let's start with crypto and Bitcoin, your favorite topic. Oh my God, to that. All right. So Bitcoin, and while I'm at it, it's actually has a use, I have found. They're funding donations to the Ukrainian military through Bitcoin. No wonder Russia banned it. You see? It has some use after all. But nonetheless, all right, we're not talking about billions of dollars. We're talking about a few millions of dollars. Okay, so we're not talking about a market moving event. And as a matter of fact, cryptos have been down, and Bitcoin, if it makes a new lower low than the one before, it's firmly in a downtrend. I think it is anyway, but it's close, and it's likely to go down to 20,000. That's my guess, where it'll find some support, but we'll see. Okay. Second canary in the coal mine is Tesla. Oh, what can I say about Elon the Felon, or Teflon Elon Musk, other than to say that everybody and his brother is suing him? He doesn't care. Okay? And I do have a question for Elon. Okay? Since you make electric, which has higher torque, okay, than fossil fuels, and you also make solar panels, and you can get batteries, okay, why don't you have an electric ship? The solar panels would recharge the batteries, now wouldn't they? They wouldn't, because you just had to bail your brother out on that solar company and buy it off of him because he was getting his butt kicked. Oh, and he also traded ahead of you too, I understand. Just one day ahead of an announcement of yours, but you didn't tell him, right? Yes, I believe you. Okay. Anyway, Tesla has broken down. Look at that, fairly significant drop. That says, and I'm not sure where support is on this thing. I mean, I really don't know. We'll have to see. It's already down from its highs. Oh, his brother sold at more than 1,200. Okay, if you look at this graph, that's not that's good timing. Oh, God, if I might say so myself. And he didn't have anybody to go ding ding like me. So I don't know how he did it. How did he know? All right, so Tesla looks like it's finally breaking down, and who knows where it's going to go. At some point, reality is going to dawn upon Elon the Felon, and he's going to realize there's not enough electricity generation to fuel all your cars, and they're going to be sitting and sitting and sitting as unused inventory, and that ain't too far off. Okay. ARK Innovation, this is basically an ETF of the hippest stocks. Beyond Meat, Peloton, DraftKings, where you can gamble on gambling, and what else? Zoom, and just about everything that came out in an overpriced IPO and went up like a factor of 3 on the opening. Anyway, look at that. Don't go telling anybody that you're in this, because you've lost money, okay? And God giveth and God taketh away, and that's the way it goes in the markets, okay? People become overnight heroes. They become overnight goats. Just ask Henry Blodgett, who was the internet expert, although he made a comeback. So he's actually done pretty well. But there are a lot of people who've gone out on a limb, and all of a sudden they went, ooh, okay. So finally, the fourth one, this is called Renaissance IPO. It basically looks a lot like ARK Innovation, so I won't spend too much time on it. But it's all the IPOs. And probably made a lot of money, being able to buy at the offering price, not the initial opening price. And that's a big difference. A lot of them, may have been priced at 20, but they opened at 60. You didn't buy at 60, you bought at 20. So that's got to tell you something right here. All right, so on to the Dow Jones Industrials. This guy warrants a ding ding too. We had a ding ding last week, as a matter of fact. And what you can see here is that it was in a bear flag. Now we've expanded to 5 years in an awful lot of the charts because the patterns of consolidation, the sort of sideways or, up, slightly down, those patterns have in many cases lasted a year and a half. That's significant because once they last that long, the movement from there, either up or down, tends to be very, very dramatic. We've all broken them down. So all I can say to you is watch out because it's not going to be very pleasant, okay? All right. All right. Hey, Mr. President, how are you? Yeah, we're going to talk about that. Yes. As a matter of fact, here's my idea, okay? Mr. President, are you there? Are you there? Are you there? I don't know about that, but I guess I'll tell them later. I'll tell you guys. All right, Dow Jones Industrial average 5 years weekly. And right, bear flag. The thing I failed to mention, which I want to mention here, is a high below high and a low below low. That defines a downtrend. That defines a downtrend. Our primary trend is down. You've got to understand that. Much different than playing a trend that is primarily up. Believe me, your mistakes are papered over when it goes up. They are magnified when it goes down. Okay. The NASDAQ 100, we ding-dinged this one many weeks ago. And here's another thing I want to mention about what you're going to see in a lot of charts here. And you're going to see this on the NASDAQ 100 is that you've got, basically, and I've done this in blue in an awful lot of them. So I'm going to draw this in here. But there was a huge, that's not blue. There was a huge huge intraday reversal between here and here in so many stocks, okay, that it looked like a powerful rally, but it still didn't get to this trend line here, see? And that's the thing. Sharp, short rallies to the downward trend. That is what we think is shaping up as the probable pattern of what's in front of us, okay? So you've got to expect these. Don't get too overly short or you get your head blown off. And use these rallies to lighten up. Lighten up anything that you think might be exposed to the horrible things that are coming down the pike. We've talked about them. We're not going to talk about them too much today, but we've talked about them. You have to go to the last couple shows. I want this thing move. It's not moving. Oh, not. I know why. There we go. Technical difficulties. Okay. Standard & Poor's 500. Another ding ding. Curling over. Rounded top. You're going to hear that a lot too today. Rounded top, rounded top, rounded top, ascending flag, bear flag, bull flag. The chart patterns are all very similar. And they're not that complicated, but trading them is. That's the problem. All right. Also, Standard & Poor's small caps, not looking so good either. Ding, ding. All right, on that one. As a matter of fact, you can pretty much say ding, ding to everything, and I will say that, except for a couple of things that we will show you. Probably primarily commodities, and that's about it really. Because other than that, we are seeing a paradigm shift, which we talked about a year ago in Inflation Nation, or the paradigm shift. We talked about there being a move toward commodities away from fiat or paper. A move too hard from soft, I guess. Hope that doesn't get censored out. All right. So Dow Jones Transportation, no good. All right, now we're going to give you some happy news here, and we have a happy bell, okay? This is our happy bell, I think. See his little smile on his face? He's happy. We're happy because of gold and silver and gold and silver and gold and silver. Looking great. This is something we've tirelessly been waiting for, and it's finally happening. Now, gold also had an intraday, a huge reversal, which you see on here as that little spike above. It actually was as high, I think as high as about 1970 overnight. And it is so news dependent right now, or it appears to be. A sudden change in news and this thing's flying $20 in the other direction until people figure out, wait a minute, that wasn't other news. And so you got to be very careful right now about how you get in. Weakness is the perfect time. We just had some. It's time. Okay? It's time to get in. 20 years? Oh, before I go on, here's what I wanted to say. Now, this move from, I'm going to show you. We're not going to have technical difficulties, I promise, okay? Promise. Okay, so this move from here to here, okay? That was about 600%, roughly, okay? I'm sorry, not 600%. That was from 1200 to 2100. And if you project the same kind of move, same percentage move from, say, here, 1700, okay? That projects out to about almost 3,000. Oops, let's see if I can write that legibly. I look like a little kid. That's 3,000, okay? But in any event, we're looking at a fairly big move in several months' time. We're not looking for a move that is going to take, well, actually, this one took about maybe a year plus, year and a half. But next year and a half, we could see a move just like that, okay? Just, rule of thumb, no guarantees, but that's how you might want to look at it. Here's gold 20 years. We can also project it too using the same techniques. This is also broken out, so you can see with the yellow ellipse all the way to your right. And as I mentioned before, gold got as high as about 1970, 1975 overnight, and it has had $100 swings in span a few hours. So, you have to be aware that those things are designed to throw you off the horse, okay? Mr. Market's trying to throw you off the horse and scare you. So until it breaks a trend line or something like that, this is what you're going to see. Sharp, short rallies up to a declining trend line on the bad things. On the good things, you also might see sharp, short declines, okay? This one was a sharp, short decline, okay? Because it went down, it was starting to move up, and all of a sudden the bottom fell out from under it, but not so far, not that bad, really. I mean, it certainly didn't lose anything, and it's looking pretty good. I think this one. Now, we can also project this thing out. Now, gold in its last major cycle bull market went from about 200 to roughly, let's call it 1900. So let's say the gold is up by a factor of 8, 9, something like that. If we take that same methodology, again, rule of thumb only, this is not meant to be any precision, unless, of course, I hit it, in which case it was always precision. So right here, we've got kind of a bottom of about 1,000 or so, okay, about 1,000. So if we take that same rule of thumb, take it from 1,000, mark it up about 8 times, you get about 8,000. 8,000, okay? 8,000. The problem is, what kind of world are we going to have with gold at 8,000? Kind of figured that too. But better to have the gold at 8,000 and face that horrible world than not. But still, it's not going to be good news. Silver too is looking good, and it's looking good on this is a 1-year chart. It broke out above a declining top sign. Look at that. Also had a retrenchment right to the line, sometimes a little through the line, but that's it. It didn't break a trend line. It didn't break trend line I would have drawn on this thing, and that you should be kind of thinking about is this one right here. It would be this, something like that. And it didn't break that. So it's fine. And I don't think it will, because on Friday it started to creep up, it closed on its highs of the day, and I think you'll get another burst in this thing beginning Monday. Probably the futures market will be up strong. We'll see. All right, so let's keep going. Silver, monthly 20 years. Again, a great chart. And this one, this move right here that took it from over here to right here, that move was about roughly 10 times. Okay, so if you were to take, say, down here at 12 and a half and go 12 times, that's 125. That would project to 125. Okay, that would be like a record high. So it's a very good prospect. Here's 5 years weekly, breakout 2, looking good. All right, gold and silver miners. Now, this is one way to play gold would be by a basket of their miners. There are several ETFs that you could do that with. That way you don't have company-specific risk. And they're subject to a lot of risk, some of it good, some of it bad. the small ones tend to be bought up a lot, and sometimes they have, you know, they have not dry wells, but a dry deposit or whatever, or a deposit is not what they thought it was. Gold and silver miners kind of just broke out, came back to the line. It's very common to to snap back to the line. Like for example, it's very common to snap back to this, and that's kind of what happened. Okay, it doesn't mean anything other than the fact it snapped back to the line, and it kicks some people off. When it starts looking really good and people get bucked off the buck and bronco, well, that's what keeps them being able to ride a bull market all the way up. That's why people don't make anything. They sit there like this on the way down. Oh no! They won't do anything. Cut your losses. Cut your losses. Or take your money off the table before the table takes your money off you. How hard is that to figure out? Okay, so that's gold and silver miners. Another good sign. US dollar has had some, and we're going to actually have specific gold issues coming up in a few minutes, okay? Specific ones, mind you, specific. All right, the dollar, now look at this. This thing had another weird day. This thing looked like it was breaking out, and all of a sudden it came right back. The question is, okay, is it still going to remain in its uptrend or not? And that I can't tell you. I really can't tell you. All I know is gold's going up. Probably the dollar's going down. But, the dollar and gold went up in the last several weeks, so they're not quite dependent on each other. And here's 20 years. 20 years is just kind of in the middle of a range, but, this sideways range right here is several years, and if it breaks above or below the red line or the green line, probably will have a good move ahead of it. The commodities index and inflation is obviously the news to some people, but not frequent, regular watchers of Hulu. No, we've talked about this for a year at least. CRB commodities index, a big basket of commodities, still cranking higher. Okay. Treasury inflation protected securities. We showed these to you last week. These are the ones whose principal goes up with inflation expectations. And this one kind of came down a little bit. Looked like a rounded top, possibly, but as you can see, it bounced back, aborted. It's kind of like abort. And while the rounded top is a terrific chart pattern, no chart pattern is 100% guaranteed, not at all. But this one is, the reason I tended to doubt this anyway was because that would mean inflation was coming down, and there were no other signs that was the case. So, sometimes you have to look at other things which are confirming, coincident, or not confirming, and just take those into account. Now, the 0 to 5 year tips, the short-term tips, they did abort a rounded top, and they've actually made, I think, a new high. So, suffice it to say that inflation was not transitory, as my good friend Jay Powell has said with his fingers crossed behind his back, and a little bit of this has said to the press and all of us. Okay, the agriculture fund, look at that. Talk about reversals. See, this is a primary bull market, and it's having sharp short corrections, and it's going to the trend line. Okay, so that's perfect kind of action. It'll shake everybody up. No one can get too excited about their holdings, basically, because they're being shaken out of them. Who wouldn't be scared by that and think, oh, it's over? Okay, one reason's wheat, and we have Russia, Ukraine being the wheat basket of Europe. There you go. And it came up, came down, but I would guess it's probably continuing higher with the the inability of Ukraine maybe to produce as much as it did. Livestock also took a sharp short correction down, but not even to the trend line. See, now something's starting to reoccur. Sharp short corrections, either sharp short bear market rallies or sharp short corrections of something in a bull market like commodities are. And you're going to see these all the time. And that's why you have to be careful about reacting to this, especially if you really are a long-term investor. Corn, same thing. And Russia's a big corn producer, I understand. Soy also. Look at that. And crude oil. Crude oil went above 100, came back down below 90 in like a day. And again, geopolitical tensions. And if Mr. Biden had been here, I would have told him exactly what to do. The Russians, who actually only have an 18% debt to GDP ratio versus our 150%, okay? Basically, and they have a budget surplus. You know why? Because high oil prices. They're a big producer. We're now a net importer. Thank you very much to the current administration for that. We used to be a net exporter. Well, if you turn the shale guys loose, we will be again. Okay? And they depend on oil revenues to fund things like the military. So when Mr. Biden wakes up, could somebody please tell him that? Thank you. All right, let's go to gasoline. And gasoline's almost $3 $3 a gallon wholesale. All right, that means $6 in California if you're lucky enough to live in the tax state, in the tax me state. In any event, base metals up. They make things. They are the cheap kind, like nickel, which is worth more than a nickel. So keep your nickels. All right, and copper. You never catch me alive, copper. And this is a bull flag. This thing, copper, looks like it is about to make another run to new highs. Again, inflation is not transitory, and this is one sign of it right there. Lumber, another housing product, and lumber looks like it's going to lumber higher here, actually. We'll see about it, but since everything else is moving up, I gather lumber will too. And that brings me to my favorite topic, which is vote out all the incumbents, make America laugh again, and don't let these guys get away with it. We're in trouble because of them. You hired them. We hired them. Let's fire them, all of them. You know, I don't care what party you're with, fire them. You know, if you want to vote for the same party, go right ahead. I don't care about your ideology. We just don't want professional politicians in there who run for re-election, and all of a sudden their big donors like Pfizer are getting a lot of money. How do you think that happens, huh? I don't want to talk about it. All right, Ethereum, for you crypto lovers. Ethereum also about to make a bottom below bottom. I think this one is, I don't know what this worth. You know, there's a real precedent behind it. And believe it or not, he's actually, I think he's a Russian who favors Ukraine, which is interesting. I'm a Ukrainian who, just wants to see the right thing happen, whatever the hell that is. But I hate to see, the country my ancestors invaded. So who knows? Bitcoin Cash, 5 years, right there. Litecoin keeps getting lighter all the time. And Ripple keeps rippling on lower. It's going to be with nothing pretty soon. And I got to tell you, the entire crypto space is so unseemly. I mean, these people are such low class. I got to tell you about them. Oh, sorry. But as I was saying about them being low class, there is so much in there that is absolutely, quasi-legal at best. And that's just a problem. MicroStrategies continues to get my worst stupid strategy by a company CEO award. Michael Saylor, new in town, Saylor. He's been buying up Bitcoin like there's no tomorrow, borrowing money to do it, and the asset's not volatile enough for him, I guess. And he's in love with his Bitcoin, just loves it. Never gonna sell it, never. Okay, we'll see. Maybe a court will sell it when you're in receivership. Riot Blockchain is another. This is what all the crypto crazies keep telling you. Oh, but blockchain! I'd be rioting too if I was one of these shareholders. Got nowhere. Dead money for 5 years. What kind of future is that? Isn't the future supposed to be brighter and go on? Not in this space. No, not at all. Square D. This is a company I sometimes talk about. Actually, now it's called Block, as in blockhead, although it does blockchain, and it also owns Cash App, which has a ton of lawsuits because they help themselves to your money. They help themselves to some of mine. I kid you not. I had $250 in there. Practically my entire wealth gone. And here are some cool picks for you to watch. Okay, so we're going to ring the happy bell one more time. Okay, here. And these are some that you might want to look at, okay? The reason I picked these, I will tell you now, okay? Yamana, it broke out already. So it is leading a lot of the miners. Remember, you saw the miners as a group were just peaking above the declining line. These guys are doing real well. So they're breaking out for a reason. They're strong for a reason. They're relatively strong for a reason. And you look at that kind of stuff because this one will make a higher high much before other companies will just rally in sympathy with gold itself. Eldorado Gold I love, and I have shown this one before. Now, again, I drew the box there around the reversal, but the reversal was huge, and it would have like shaken you up, but didn't change anything. It just went back to the trend line. And how high might we go in Eldorado? Look at that. Once it breaks out from this little pattern here at the bottom right, well, it's been at 100 before. Well, it's going to get there again and maybe get even higher. You don't even know. Because gold is definitely going a lot higher. 8,000 just a number. Don't count on it. Don't quote me unless it's right. Then you can quote me all you want. But this thing could go a lot higher. So I like it for that. Barrick is one of the largest. It's one of the two largest. And a low-cost producer. This one also looking real good. Wheaton, precious metals. This one's mostly silver. Breaking out above the trend line. Looking good. As a matter of fact, it's looking good, man. There you go. Okay. Now, let's go on to interest rates. These are the 5 years. Now, what you'll notice here is that they've basically been in a declining trend for not 20. This is 20 years. For 40. They had a 40-year graph. I'd show you a 40-year declining trend because since 1982, and we had Paul Volcker at the Fed, who actually really combated inflation, did the right thing, was not a political hack. Well, we've had nothing but lower rates ever since, until now. Now, the target for this thing, for this guy is about 250. And that's interesting, 2.5%. Not very far, not a lot by historical standards, but this also has a target of about 250. This is a 10-year, all right? 10-year looks kind of the same, has bottoms above bottoms, tops above tops. That's an uptrend, all right? Right down here at the bottom right, all right? And this guy also should have some resistance at 250. Interesting. 30 years. Same kind of look. They've been coming down forever. And this 275. So what this is saying is the yield curve is flattening. Okay. We're seeing a much smaller differential between the short end and the long end. That's not conducive to economic growth. That's actually recessionary. And that would start you wondering how bad it's going to get when the Fed actually does something other than keep rates at zero. Inflation at 7%. It's like, it's a little too much withdrawal, Mr. Chairman. Okay. All right. Here's Apple. Apple is in a bear flag. It's made bottoms below bottoms and tops below tops, and she's going down. Amazon, this is one of those that went below the line, now above the line. And that's why I have to be careful in getting these kinds of, riding these things out, or not riding them out, or chasing them on the way down is really the problem. You should be, look at rallies. Like now, if you really want to short Amazon, buy puts. I don't know about puts, but you want to do it after a rally. You don't want to do it when it's, going down and you're just panicking and selling. That's like the wrong thing to do. That's when you get, oh, I should have never done that. But you do anyway. Meta Platforms, my favorite company, my favorite CEO. He's being sued for a 2012 complaint, and they settled it this week. He settled for almost $100 million for selling private information, including the ability to track you, so you know everywhere you went. Now, how many of the 2 billion users are going to join the class action lawsuit that is right around the corner? Yeah, Meta is going to be meta bad, and that's all I can tell you, meta bad. So there we go. All right. Google, 20 for 1 stock split, probably to enter the Dow. When it does it, it's going to be priced at about 130. Almost all the Dow components are priced between 100 and 200. There's a couple of exceptions, like maybe 40-ish, 50-ish, couple there. There's Costco's a little higher, but in general, you have 120, 125, 128, et cetera, et cetera. They kind of, because it's such a stupidly calculated index being price weighted, you can't put in a $3,000 stock because it would have 3,000 times the influence of a dollar stock. Or a $100 stock had 30 times the influence. So what's the point? And there's really no rush to do stock splits. They don't do anything. I mean, it's like slicing a pizza into 16 instead of 8. Oh boy, I'm hungry. I could use another slice. Okay. Anyway, this one looks like it's turning around too. It found support where we would think it would, roughly, which was the neckline, the red line below the rounded top. So Google looks like it's going to join the party on the way down. So is Microsoft, rounded top, looking like the same. Netflix already has. It's now got a 50% off sale, as you can see, from $700 to $350. 50% off after Christmas. Netflix. There you go. Oh, Facebook had one of those too. No, I'm sorry. Meta platforms. Thank you. All right. Bank index. Ooh, a bear flag. These guys were pulling the market all the way up in the last few months. When all these tech stocks are going like that. The bank stocks are still kind of chugging higher. This thing's going to break. Bear flags are not good. You're going to have a hell of a come down in these. I do declare. Broker-dealer index, similarly. These have had a bear flag for more than a year. And it's a matter of time before these guys start coming down quite a bit. Goldman Sachs, which is the chief protagonist, is completing a rounded top. It's about to go down too. And we'll see about that. American Express actually was looking good for a little bit. Kind of look at that intraday move. See, again, they were plunging. They rally in the middle of the day. And, the move from top to bottom is breathtaking. So if you were one of those people that got all excited, the market's going down, and you started short there, oh, did you make a mistake? Were you about to put option there? I'd kiss that money goodbye. MasterCard is again going sideways, had a big intraday reversal. This one tends to follow with retail sales, and so we keep an eye on the credit card companies. And Visa 2, snap back up to the parabolic line. About all I can say. Costco, look at that. It went from one end of the triangle to the other end of the triangle. And my guess is that on Monday, we will see it continue down. If it maybe opens up, but I don't think it's going a lot higher from here. If it does, we have to rethink everything because this should not. Things go down in a bear market. They do not break up. We are in a bear market. That means you're going to see this all the way down. And just when you get hopeful, the sellers come in and they go, thank God I can get out. Target is almost at a 52-week low, okay? That's how bad it is for retailers right now. Demand is way off. News for you. Home Depot. Terrible. Now we're giving you the bad news. Ugh. Walmart joining the party too. FedEx, this is ominous. They deliver, sort of. Not as much, apparently, although there's talk of having them do something with the postal service so that we actually do have things that get to us. And UPS also had a little sharp reversal there. It kind of looked okay, but I'm going to say that this one will continue down. Everything else says it will, therefore I think it will. The airline index also had a snapback. It's probably going to get to that red line, come back down, and break down. These guys are losing money. They're not worth anything. They're all bankrupt anyway without the federal bailout, so I don't know why they have any value at all. Home builders, this is as ominous as it gets. Lumber prices are going higher in all likelihood. Copper prices going higher in all likelihood. Interest rates going higher in all likelihood. This means that homes will not be built that would have been built otherwise. And I don't know whether they should have been or should be. But the point is, this is a critical sector. It affects things like all kinds of consumer durables like refrigerators and all that. McDonald's was doing really well. Look at that. I mean, it had a snapback, but it also has broken down. This is one of the last remaining holdouts was McDonald's. And there it is, down. Procter & Gamble, they sell a lot of diapers and Depends. And not that I would know anybody that uses Depends, but they sell them and a few other things. And again, rounded top, and a little snapback there, get happy for about a day, and then get very unhappy is what I think is going to happen. And that's it, I guess. So I want to thank you very much for tuning in again. We are very appreciative of it. We try to give you all the news that's fit to print, but never would be fit to print because the media is not fit to print anything that's true. With that, I'd like you to please like and subscribe. If you have any questions, comments, criticisms, feel free to leave them for us, and we will see you next week.